Good morning everybody, it's Christian from Student Education with the aforementioned notice update for the 14th of February. Happy Valentine's Day to those who take this day seriously. No, I'm kidding. Yeah, I'm here doing the formation this morning, starting with the Euro against US dollar on our CTC strategy template. I'm just going to have it opened on our daily just to have a look at the overall time frame for the larger picture. And you'll notice that what we've done, or what we've seen recently, is if I just draw a quick couple of lines here. Let's take that one. That was the previous swing. Okay. Then we had the intermediate downtrend from a high point. Previous swing is now lower. And you'll notice that Friday's candle closed slightly lower than that previous swing. Okay, very important. Trend direction now. We're having the CTC blue. We've had a red candle in this build up, but we're still blue across the board. Okay, and for the first time now, we're seeing the pair close lower than the 20 period moving average. First time in as many in the last month or so. And now we're seeing the Asian market. It opened lower, and now we're trading lower than this support level. Okay, so what's it telling you straight away? Well, market sentiment is kind of negative, isn't it? This lower than that, and a break of a previous support level. Now what we might want to see is what you might see is a consolidation, a breakout pullback to the underside of the support level, maybe a breakup, and then a continuation in the downside, or we could see the price break up, pull back, and then rally. So we have a long wick, and then we could see it bounce further to the upside. So there's two ways to read this. So first of all, if you're looking for further downside movement, which is what we should be looking for intraday wise, is for obviously the close of the Asian market. So the low has to be breached. Okay, the Asian market high, or low, sorry, 1350 would need to be breached, and for as long as the price can stay below this level here, ultimately this level here, okay, if I can just get a reading of that line there, you're looking at 1356.23. If you can stay below 1356.20 during the course of this morning, then there's a good favorability that we could see further downside movement during the course of the US session later this afternoon. So let's have a look at the intraday stuff quickly. You can see straight away that our CTC and our moving, because we're in a downtrend, that our moving averages etc. should be trading above price action, and our CTC should be showing a negative. And you can see that the 50 period moving average on our 30 minute, for example, acted as a resistance level on this for a long period of time, and you can see just recently in the shorter term, you can see we're starting to test an intermediate resistance level to the upside. If you look at the upswing, however, you can see we're now in a bit of a squeeze pattern. Okay, higher highs, lower highs, and the moving averages are squeezing now. Intermediate moving averages. So we're trading above those now. All we need now is a break higher. So it needs to be breaking higher than the Asian market high. In this case, this part here. So we can see it close definitely above those areas there, for example, at 1350. Then we could see further upside moving during the course of this morning. And we could look at our areas such as that, for example, as one, there, for example, as one, and ultimately the high end over here. Okay, so wait for that confirmation. If we see a further push to the upside, wait for it to break above this strong resistance level here at 1350, get a definite bounce, and then we could look at further extensions to 1357, 1359, and ultimately here at 1361.50. There you guys. Otherwise, what we can see is just revert back down to the downside because of all this resistance we've seen here at 1350. So clear break and close above that would confirm further upside movement. Hey guys, that's Euro for US dollar. I'll be back next with the sterling against US dollar. Take care.